Fannie Mae and Freddie Mac have added billions of dollars of mortgage-backed securities and home loans to their balance sheets in recent months. That's adding to speculation they're trying to lower lending rates and boost profitability ahead of a potential secondary offering. Bloomberg's Scott Carpenter covers credit and joins us here on set. Scott, great to have you on the program. This is a story that has been persistent because Bill Ackman often tweets about Fannie and Freddie. The president and those around him talk about it a lot. But for many people, what these companies do, these government-related entities, is kind of nebulous. So step back and explain exactly what the story is.
Yeah, absolutely. So Fannie and Freddie are enormous government-sponsored companies. They're designed to support the market for home loans and ultimately make it easier to take out mortgages. They underwrite something like more than half of all mortgages in America, so they're enormous, right? The main thing they do is they provide a financial guarantee on mortgage bonds. That's how most of these home loans get financed. That's the main thing they do. They also, and this is the part that's not talked about quite as much, they also buy some of those mortgage bonds and home loans themselves. By doing that, they can support the market and also earn revenue for themselves. They get money from providing the financial guarantee. They charge money on that. They also get money when they buy the mortgage bonds. So it's sort of like, for them, it's called their investment portfolio or their retained portfolios. This is in addition today to their main business of providing the financial guarantee. And what's been happening and what we wrote about is that since June, between June and October, they've increased that investment portfolio by about 25%. It's now roughly $233 billion. That's a lot. The agency mortgage bond market is enormous. It's about $9 trillion. So still, it's not the whole thing by any stretch, but it's growing. And what people are talking about, what all strategists, a lot of investors I talk to are talking about, is that it's on a trajectory to continue growing into next year. Citigroup is expecting them to add $100 billion. There's a wide range. Nobody knows exactly what they're going to do because Fannie and Freddie and their regulator, the FHFA, have been tight-lipped about this.
So, but let me ask, clearly if they buy mortgage bonds, that'll push the rate down, right? Price up, yield down.
Yeah.
But why would they want to keep lending costs down and grow their portfolio as a precursor to what's being called an IPO? Although, obviously, it's not an initial public offering since the shares are already pretty public.
Right. To do an IPO, which is what the Trump administration is clear they would like to do, the GSEs, Fannie and Freddie, need to have really good earnings. If you're going to invest in an IPO, if you're going to buy shares of a company that are being offered publicly, you want that company, or in this case companies, to be very profitable. So you want them to be quite profitable, right? And this, by increasing the investment portfolios, you're increasing the earnings, although it depends on what your funding costs are and so on. But that could be what's going on here. They have the IPO in mind as well as other possible objectives like lowering mortgage rates, and they're thinking, how do we make this possible? One way to do that could be buying more mortgage bonds, mortgage loans, increasing their earnings, presenting better profitability so that when it comes time to do an offering, investors like what they see.